All right, first thing, let's kind of get some ground rules about trading. If you looked on most websites and read most stuff, they'd tell you that trading is a battle, it's war, it's you against them, it's you against the market or the broker. It's dog eat dog, you know, it's die, kill or be killed. But think about if you were played with your friends every day, and when you went there, it was nothing but fighting. It wouldn't take you very long. You wouldn't want to play with your friends, right? I mean, somebody'd be getting hurt every day. Sometimes it's better when you play. People are going to get hurt occasionally, but it's better to play together, somewhat play nice. That might be the key to trading, to try and play nice with the market. Don't try to fight it. If you fight it, you're probably going to lose, or I would lose for sure. This right here is the Euro CAD. Now let's kind of go back over some stuff because I know it's been a while and you've probably forgotten. You remember Peyton's green line, red line? Now you know there's more to it than that green line and red line. You've seen the charts. That green line and red line just kind of it simplifies it to something that you can kind of grasp easier. There's no point in seeing anything that really doesn't help you out. So here's the green line, here's the red line, and you see this right here. That's the zigzag. That's another indicator. Have we talked about the zigzag? Okay, that's what's going to be important today. Okay, take the chart, starts over here, right? Take the mouse, show me the first place using Peyton's green line, red line type indicator. Show me the first place you would do something and tell me what you would do there.
You would sell.
If you wanted to. Okay.
Buy.
Okay, but you don't have to. But if you wanted to, okay, there is a reason. Okay, go ahead.
Right here, since the red is a little, you could have bought, or you. Well,
you could have what?
You could have.
It's red.
You could sell.
Sell, right? Okay. And what were you going to say? I messed you up. I messed your train of thought. What were you going to say?
You could have
sold.
Bought.
No, sold.
Sold or bought, but
No.
you can't do both.
Yeah, no. When it turns red, you sell. I mean, yeah, you could buy or sell every day, but what you're interested in right now, this red line. What I thought you were going to say, do you think, you see how short that red line is in comparison to this one? Do you think you would have made money or lost money when the line is that short?
That's what I was trying to think of.
That's what I thought you were trying to think, and then you changed it up. Okay, yeah. Oh, yeah, so you was trying to remember? Yeah, I got you, yeah. Okay, yeah. Odds are you would have lost money there. We can't say for sure without looking at the chart and knowing some things, but it's not important. Just know that if the line is short, you didn't have follow through, and odds are you would have lost money. It's safe to assume it. Okay, so go to the next spot.
Buy.
Okay.
Sell.
Sell, right.
Why does that have that arrow right there?
That's Peyton's arrow. Remember how we moved the arrows up here, and you could tell how much you'd have made if you'd have sold there and bought right here? All right. Now, you see, when you buy right here, when you sell right here, it does not go down smooth like that. If you looked at the chart itself, you'd see that it's all over the place. Let's see here, EuroCAD, week. You see, it's up, it's down, it's up, it's down, it's up, it's down. It's all over the place. What you need to do, if you sell, keep in mind, if you were to sell right there, keep in mind that as the price goes down, it's going to move back again. It has the potential to move back against you. So you can't just get carried away and sell and never stop selling. You have to be prepared for what's called a retrace. You see how this line goes down? And see how it kind of bounces back up? That's called a retrace. It tried to go back up. It retraced some of its steps. See how it goes down? See how it goes back up here? That's a retrace. You see how it goes down? And you see how it goes back up here? That's even more of a retrace. See, it's higher than that.
But the highest one is that one.
That's right, yeah. You know, when you see a strawberry, a regular size strawberry, you know what size they are. And you know how some strawberries are a lot bigger. They're 2 or 3 times bigger. But you don't never see a strawberry as big as a basketball. There's a limit to how big they can go, unless there's some sort of outside unusual interference. There's a limit to how big they can go. But on average, they're going to be a certain size. That's why out there at that pear tree we went to a while ago, remember we picked 10 pears. We weighed all 10 of them. We picked all 10 that were on that one limb, So we didn't pick one here, one there. And then we weighed them. And then we could see some were heavier, some were bigger, some were lighter. But there was an average weight. You could average out and you could say, okay, every one of these pears on average weighs 4/10 of a pound. I think that's what they did average, about 4/10 of a pound on average. Some were bigger, some were smaller. What you need to do when you sell right here, and I don't expect you to remember all this, it's just, you know, you build towards remembering it. This right here is going to be a whole bunch of numbers, and there's only one thing that's going to matter. Well, that's not a bunch of numbers. Oh, here it is. Okay, here. What does that word say right there? What is that?
EURCAD.
And that is what?
Euro, Canadian, dollar.
Right. You see here, 180, or you can say 10,080. That's the weekly time frame. That's how many minutes there are in a week. This number right here, 643, you see how it says average EuroCAD? The average zigzag length on the EuroCAD chart on the weekly time frame is 643 pips. Remember that.
I probably won't, but I'll...
No, I'm talking about for, you know, you won't remember it. I don't even remember it, and I do this every day. But just remember 643 for about 2 more minutes, let's say that. The current zigzag is 758 right there. Let's go back here. I'm going to do the mouse thing. Okay, so what that's saying is the average of these lines, up, down, just like the pairs. We weighed all in pairs. The average length was 643. I forgot already. Is that what it was? Yeah, 643. The average length is 643, but the current length is 748. Let's see how close that is.
Do I still have to remember
No,
648?
no, I just wanted you to see that. While I was approaching the end of your limits there. 600, and of course this is just kind of a rough deal here. 661 pips is how long this is, and that's a rough estimate. So on average, this line will be 643 pips long. So once it gets 643 pips, we can start preparing for a retrace. So as it comes down, it falls down here, we can start getting prepared for the price to move against us. And as it falls down here, 643 pips, and again, this is a very rough idea, but it's just something that we keep in the back of our mind. We get prepared for a retrace. So if it came down, let me say if we sold right there, and let's just say this is a point. Let's go down 643 pips. Right there, 645. That's 641. Right about here, we're going to get prepared for it to move against us. So when we get to here, we might not want to place any more trades for a little bit, because if the price goes against us, we stand a chance of losing. So what you want to do, you want to put most of your trades up here at the top. And as you get down, 643, you kind of back off. And then, sure enough, here, a little bit short time later, it goes and it goes back up, and this time it only went up 364 against us, but it might have gone higher, like this one went higher. So then it starts back down. Let's see how long this length is. 730, about 730. Once we got to 643, we would start getting cautious. We wouldn't want to be putting a whole bunch of trades there. You're going to want to, but you need to resist it. Sure enough, it jumps back up. And when it jumps back up like that, usually these areas are a good place. Now you can go ahead and sell. Either have some other type orders, but at least here, you're not selling down here. And then when it goes back down, let's see how far that went. That time it went 660 thereabouts. Once it falls down that far, once that line is that far, we start getting cautious about adding new trades. And sure enough, look what it did. It jumped back up. Now let's put our trades on here. What am I on, a weekly chart? No, let's see here. Tools, options, show trade levels. I'll tell you, before I do that, no, it's too late. Let's see here. Tools, options, show trade levels. Okay. Okay. Here's our current trades right now. So let me zoom in a little bit. And the price is right here, right now. Price
that went up really high.
Yeah, it did.
So we had to get really cautious when we were right here, to straight back down, then go up.
Yeah, and as it goes up, all the way up, what you're going to be doing, you're going to be saying, oh, it's going to turn down any minute. It's going to turn down any minute. You have to fight that. You never know when it's going to turn down. The only thing you know is you're going to be thinking it's going to go against you any minute. That's when your fear of losing money outweighs your desire to gain money. Your desire to gain money, you don't want to be greedy. Remember, we're not fighting, right? We're playing with the market. The market is telling us when this green line is going up, hey, you want to play nice? You want to play fair? Be buying right now. Right here, the market's telling us when it's red. You want to be nice? You want to play fair? Let's sell right now. The market is telling you to sell right now. It's telling you that quietly. It doesn't blurt it out, you know. Now, if you want to be buying and you want to fight the market, you're probably going to get hurt. Got a good chance of being hurt. At least I would get hurt. But if we go with what the market says, and we're teaming up with the market, we're a team, you know, like that Everything Is Awesome song or whatever it is when you're part of a team. You're a team right now. You're playing with the market, and you just keep, you know, going with it. Keeping in mind that occasionally the price will move up against you. The retraces. What was I doing?
And then when it's green, you'll want to follow. You want to buy. You want to go with the market and buy.
Right. Yeah. But don't get carried away. Okay. So let's see now. From right here to right here is 470 pips. So really, it has a little bit ways to go back down before. Well, how far would 640 be? 640 is going to be about right here. It's going to be about midways right there. Let's put a line right there. Okay, on average. But remember, some of those pears were bigger than the others, right? Some strawberries are bigger than the others. This line here is much bigger than this line here. Sometimes it goes further, but on average, we expect this to come down at least to here, and then that would be 643. So once we get down to here, we start getting cautious. We really don't want to place any trades. Really, what we want to do, we want to stay 50%, actually 61% above. We want our average price to be 61% of this line right here. So we we don't want to put a whole bunch of trades down here because that brings our average price way down. But we want to stay right there. And of course I realize what I'm going to do is I'm going to make a picture of this. I realize that this is a lot to throw at you. And you'll have to look, like you said a while ago, let's see here, M1 zigzag. You'll forget some of it, but we can go back over it. All right. Okay.
What does M1ZZ mean?
Makayla 1 zigzag. That's what we were doing just then. You were learning about the zigzag and average length. Okay. Shift